The point being is that it is outperforming every asset class on earth. It's not because I love it because it's new and shiny. It's because it makes everything else look pointless. I simply don't care about value versus growth. Oh, look, there's a 10% return that could have been had I timed that right. I can buy and hold Bitcoin and make 100%, and it's barely the middle of March. This is what I've been trying to pound the table about, that at this phase in the crypto cycle, nothing else matters. And that does not change. It doesn't change on a dime. We've got a wall of money that's coming in. And so everybody needs to be focused. And I'm sorry, there's a bunch of you like, I don't like this new digital stuff. It's bullshit. Why doesn't Raoul talk about interest rates? Because frankly, I don't care, because they don't generate any money for me. You know, shorting the bond market was still not the same return as just holding Bitcoin. Buying the dollar, not the same return. Buying copper, not the same return. Buying oil, not the same return. Buying the NASDAQ, not the same return. Nothing has had the same return. So why even do it? Because I think the risks have been, the risk-adjusted returns are good. Now, again, I always say the same caveat. By the time you get this, crypto's probably selling off again, and it probably sells off another 20%, and then it goes up another 50%. That is the nature of the beast. But my, what a beast it is.
How do you sort out the price action in terms of sentiment, momentum versus a true macro play where people are viewing this as an inflation hedge?
I don't. It's everything. It's everything. It's adoption. It's institutions. It's a parallel financial system where people are slowly migrating from old to new, which is probably the best way of thinking of it. It is a sentiment play because it's part of a behavioral cycle, a reflexive loop. It is some beautiful maths driven by things like stock to flow models. There is a seasonality of mysterious origin that seems to play out too. There is the technical analysis that gives the behavior of crowds. All of these things are all in this. And it actually has some purity to it that is understandable to me. And it seems to work, and it seems to be a great instrument to trade and invest in. You know, there are, and I've talked about this before, hedge funds that are making 300% returns trading this long and short. The source of alpha is gigantic. So again, I know I keep bringing this stuff up and up and up because I feel like it's my duty to tell people that there is a life raft to this broken financial system that you and I spent the first part of this show talking about. It's a parallel universe, and you can step out of one into the other. One is a world of pessimism. Where is this going to go wrong? What are the Fed going to screw up? How's the banking system going to break? How are taxes going to go up? How bad can this get? Is the equity market a bubble? You go to the other world and it's optimism. It's macro optimism in this parallel world where you can opt out of the other one. And here it's about, what can I build on this? What developments are going on? How amazing is that? Is that project going to succeed or fail? I don't know, but it looks interesting. Let's watch it. You know, where is this all going to lead to? How are they going to figure out a yield curve? Where is Bitcoin going to do? What is the size of the adoption? Are they going to sort out the transfer of payments from third world countries, remittances? How's it going to work when you and I are going to pay each other instantaneously? Are people going to be streaming money over watching videos in the future just for their attention span? Am I going to get paid to watch video or watch an advert? All of these things are actually happening in this parallel world where the individual gets the power and not the institution.
In some aspects, has been talking to me about NFTs.
NFTs basically are a single token attached to one asset. Generally a digital asset, but not necessarily so.
Right.
We broke records day before yesterday with a $69 million piece of art. Everyone's like, oh my God, it's digital, it's worth nothing, you can replicate it. I'm like, God, people don't get anything. Everybody is so reticent to understand change. They only want to benchmark it to the past. And did it trade at too high prices because it's an NFT? No, it traded at too high prices because it's priced in Ethereum. And it is moving around versus Ethereum. It's not a dollar-based instrument. That's one key point. What we're doing is going from a concentrated economy to a distributed economy, where individuals get the power over their own economics.
Yeah.
And people get power over their own communities, and they don't need to rent Facebook or Google's platforms to do it. This is a wholesale, gigantic change. It's the one we've all wanted, and as soon as it turns up, everyone goes, "Oh, I don't trust that stuff. Oh God, no, it's a bubble." I mean, really, guys? Do you honestly not realize that, sure, in an early phase, you're going to get speculative cycles, but everything everybody's been asking for, I don't like the Fed, I don't like the banks, I don't like the centralization, I don't like Google, I don't like Facebook, I don't like my data being kept, I don't like being monitored. Well, come over here, guys, the new world, it's all here.
Tell us how you think about your own asset allocation, because that is such a critical question about how you think about that balance. And I'm really curious to hear.
So again, I have a unique balance, as we all do. My balance is everything for me is a lifestyle, credits. I want to have the best quality lifestyle that I can have. And that to me is, my home life, the quality of environment that I live in, and do I have high quality income streams so I can always pay my bills, and outside of that, and I'm very lucky to be in a good situation, and outside of that you have excess savings, which is your investment portfolio, your cash, and I stick the whole fucking lot into Bitcoin, Ethereum, and a few tokens, the whole lot. I mean, every single penny I've got. And I don't usually run large cash balances generally, because I have a home and I have all the things that I need, and I like that. I don't need the cash for a lot of things, but in this instance, I need the cash to buy as much of this future world as I possibly can. And this is the right point in the cycle to take maximum risk. As I've mentioned before, I've looked at a lot of people, and there's very few people who've made their money from short-term trading. There's very few people who've made their money from a diversified portfolio. Real money is made from concentrated risk-taking, when you have done all of your homework and you're utterly confident with the risk reward. You understand the risks that you're taking. You understand that I don't use leverage. You understand what you can lose. You've got a game plan. You're taking into account all the available information. You know what to discard so you don't scare yourself out, but you listen to people who have criticisms so you can take them on board and keep continually reassessing your hypothesis. And I've never done this before. It's the first time I've ever done this, but I've waited for that opportunity my whole life.